Okay, so what we're going to look at now is the pros cons of the different options available to you so you can make an educated decision as to which one or which ones you should have as part of your financial picture. So the first option is traditional banks. These are the big national banks that most of us have heard of, like your PNCs, your Bank of America, M&T Bank. They're the ones that we see pretty much all over the place. We have regional banks. So when we think about, in our area, that would be things like Frederick City Bank, Woodsboro Bank, Middletown Valley Bank, like these ones that are very small local banks. Online banks, as the name suggests, they don't have physical buildings that you can walk into. So we're talking about banks like Ally Bank and CIT Bank, which are banks in every sense of the word, except for the fact that they don't have traditional brick and mortar buildings. So everything you do is done through an online option. And then we have credit unions. These are different to traditional banks, and it's why they also exist in this way. So when you are part of a credit union, you are a member of the credit union, you are a owner of the credit union as well. So it's almost like you imagine a bunch of people decided, hey, let's just all put some money in a pot, and then when one of us needs to borrow money from that pot, we can do so, and we pay these employees to manage the money. That's what a credit union is. So sometimes you can get different loans or different terms on a loan from a credit union. Sometimes they offer better interest rates than a traditional bank, but for the most part, they operate in a very similar manner. And then the other option, which I want to throw in here, was the piggy bank, under the mattress, jar in your house. Like you're going to store your money there. Bury it in the backyard. That's another option too. But these are pretty much where you can put your money. If we're talking about US dollars, I left crypto wallets out of here. And if you want to do like a savings option or a checking account sort of option. When you're evaluating which one to do, the things I would look for are the fees. So traditional banks like our national banks are notorious for their fees. And fees can be things like overdraft fees, they can be account maintenance fees, a minimum balance fee. So you want to look for accounts that don't have any of those pretty much. And they do exist. And a lot of times you do have to leave the big name banks to be able to get that. I would check out your regional banks and your online banks in particular for, I use Ally Bank as my online bank, and it's wonderful. There are no fees, there's no minimum account balances. You don't have to have a direct debit set up through that account either. And your piggy bank and mattress obviously don't have any fees involved except maybe like buying a piggy bank. Next up is the accessibility. How easily can you get to your money? So when we think about traditional banks, you can walk into a branch of a traditional bank and the national branches are everywhere. Versus like if you're in a regional bank like Woodsboro Bank and you travel, even an hour east or west, like you don't have a Woodsboro Bank anymore that you can get to. Which also brings up another fee, and that's ATM fees. So if you go to your bank's ATM, you typically don't pay an ATM fee, but if you go to another bank's ATM, you typically do. So if you're with a regional bank, then there is a chance that you will be paying a fee almost anytime you pull cash out of an ATM because it's unlikely you're going to find your bank's ATM everywhere you go. Some do refund the fee, so you might get it back, and it'll be like a positive transaction, so you'll have the fee taken out and then it'll be put back in, but sometimes you don't, so you want to keep an eye out for that. And then what does your traditional bank also offer? Online banks, on the other hand, because they don't have any physical locations, will almost all just refund you or waive an ATM fee. And that means you can go to any ATM. So any other bank or like those festival ATMs that have ridiculous fees, like you can actually go to those and get your fee refunded to you as well. Credit unions, same story. Like you go to your credit union to get money out, probably fine. You go to a different bank or credit union, probably not, but it depends on the credit union as well. And then your piggy bank mattress, that is the most accessible money. Like you can get to that right now when you need it. Though if you're out and you're not in your house and you need cash, you can't access that via something like a debit card or a credit card. So that's a con to your piggy bank, is that it's very easy to get the cash when it's near you, but it's not when it's not near you. Online banks, regional banks, traditional banks, they all, and credit unions will all come with a debit card, so you should be able to get to your money almost instantly. And then the only one with a online bank is that if you say need to transfer money to your traditional bank, it can be a couple of days to get it out of there. But I mean, if you have a debit card linked to it, then you can just go withdraw directly from that. With my online bank, I was using it mostly for savings, so I didn't have a debit card for the longest time. So what I would do is just transfer between PNC and Ally, and I just knew that it would take 3 to 5 business days for that to happen. So sometimes if I was spending money out of a pot that I had saved in Ally Bank, I would put on my credit card, transfer the money over, and then when the money came through, just pay off the credit card. And that was an easy way for it to just kind of work for me. In terms of what my wife and I do, we have our everyday checking stuff go through PNC. We have a small emergency fund. So pretty much our crisis fund is kept in PNC. So if we need to access a couple of $1,000s, that's something you can't really withdraw from an ATM. So if I'm thinking about Ally Bank, if I wanted to withdraw $10,000, that would be a process to do that. Versus if it's in PNC, I can walk into a PNC branch and say, look, I need to take $10,000 out. So that's a difference. That's why we keep a traditional bank around. Regional banks we don't bother with, but I can see their value. And then we're split between traditional and online banks. So I think altogether we use PNC, Ally Bank, and USAA. Those are the 3 banks that we do business with at the moment. Not formally recommending any of those, just letting you know what we do. Insurance, this is important, but most banks offer the same thing, and that is if your money ever got stolen from your account, how much is it insured up to? And this is not like someone steals your identity. This is if the bank got robbed. And most of that would be digital hacking at this point. So what you want to look for on any online bank in particular, because these are the ones that are newer and it's not easy to set up a bank, but it's easier. You are looking for FDIC insurance. So I'll write that at the bottom here. FDIC insurance for banks. For credit unions, it's slightly different. I forget what the acronym is, but again, you're looking for an insurance that goes with it. So with a traditional bank or an online bank, if it has FDIC insurance, that means that it is insured up to $250,000. So if you are in the fortunate position of having more than $250,000 in cash, you probably want to split it amongst different banks. You don't want to keep $1 million in one bank, because if the bank got robbed, your money is only insured up to $250,000. So at the point where you're hitting $250,000, you go to a different bank, you open up an account, you put money in there, and you keep repeating the process for all that cash that you have. Technology, this would refer to like the app, the usability of the website, ATMs, or other kind of like tech perks that can come with it. So like your debit card having tap features versus swipe or the chip. The bigger banks, so the national banks, will have better technology because they're bigger, they have more money, they spend it on things like infrastructure and community and customer service. The regional banks might have better quality customer service, but a lot of times their technology is not as good just because they don't have the same kind of budgets. Online banks can actually be better in a lot of cases because they are financial tech companies. So this is what they do. They make financial technology that is really user-friendly and really advanced. And I know like the online deposit, mobile depositing was something that my online bank did before PNC did. And that was a big selling point. It's like, okay, they know that because they don't have a brick and mortar building, they have to be more creative with how you can interact with it. Credit unions, same thing. They're probably, if it's a regional credit union versus a national one, so like we think of Nimio versus like Navy Federal, big difference in terms of the amount of budget they have to spend on research and development and technology. So just be aware of that. And then perks, rewards are there. So on the opposite side of fees, are there bonuses for signing up? So is there a new sign up bonus? So I think like if you went to Nimio Credit Union, they give you like $25 for opening a new savings account. I think you have to put like a minimum deposit in there to get that, but it's something that they have that maybe PNC or Bank of America doesn't offer. Different credit cards can have different perks as well, though typically I would say like your traditional bank credit cards aren't amazing, but we will get to credit cards in our credit unit. Okay, so just the different types of accounts, the pros, cons for the ones that we talked about in the last video. So same way that we're going to evaluate them. Checking account should be free. If you are being charged to have a checking account, you need to try and find a different bank. And unfortunately, this is one of the costs that comes with being in a low income earning situation, being paycheck to paycheck, being up to your eyeballs in debt, is that some checking accounts do require a minimum account balance to be maintained at all times or direct deposit from an employer. If you're working for cash or you are spending every cent that you make and more, sometimes it's impossible to maintain that minimum balance, and therefore it costs you money to have a checking account. It should not cost you to bank. So if you are with a bank that is charging you for your checking account and you know what the terms and conditions are and you can't meet those, then I would consider switching banks. If you don't know what the terms and conditions are, make sure you go find those out. I know with PNC, my wife and I both had virtual wallet. When my wife became self-employed, the virtual wallet started costing money because she didn't have a qualifying direct deposit. She was just paying herself. So we ended up having to close that and just switch to a standard checking account for her because that one didn't have the same kind of fees attached. So know your fees, know the fine print, ask the questions. That is what you need to do. In terms of accessibility, your checking account is the most accessible account you have. So you can put money in and out as many times as you want per day. You can transfer it between different accounts. You can withdraw from ATMs, like everything you want to do, you can do that with a checking account. Savings account, on the other hand, again, watch out for those fees, the minimum balance fees that you might have to keep to have that savings account. Sometimes the more you keep in the account, the higher the interest rate that's offered. So like if you only have $100 in your savings account, you might get like 0.01% interest versus if you have 10,000, it might be 0.05. Like it's still terrible, but it might go up as you have more money in there. In terms of accessibility, remembering that a savings account will sometimes have limits on how many times you can actually access your money or make a transaction per month. So I think in the case of my PNC savings account, it's 5 transactions per month before they start slapping a fee onto it every time you do a transaction. And savings accounts, one thing you might want to look for is, can you make those an overdraft protection for your checking account? So overdraft protection is a feature that's offered by banks that if you accidentally try to pay for more than what's in your checking account, or you try to withdraw from an ATM, what is going to happen in that scenario? The default for a lot of banks is they let you have the money and then they slap a $35 to $50 overdraft fee for the fact that you overdrew your account, even though there's nothing in there. Clearly you have no money, but they will still charge you a fee for it. But some options that you can put in place in a lot of cases are if you have a savings account linked to that checking account, so it's like with the same bank, you can set up overdraft protection where if you accidentally overdraw your checking account, it will pull that money from your savings account and not charge you a fee. Also look out for, is there like a fee just for them to do that for you, in which case, like, again, find a different bank. Not much difference between a high yield savings account and a savings account. High yield means that it's going to pay a higher interest rate. Usually you're getting those with your online banks. And I know for like Ally Bank, my online bank savings account and checking account are basically the same thing. The savings account has a slightly higher interest rate, but I don't think they actually limit how many times you can withdraw out of it or do transactions. But you couldn't link a debit card to it. I guess that was the big difference. The checking account, I could. Money market account, again, the restrictions on how much you can access it. A lot of these are about access, and then rewards as well. So the less access you have to it, the higher the reward is going to be in terms of the interest or bonuses that they will throw at you for using it. Certificates of deposit, you'll lock your money in for a period of time. A brokerage account, you should not be paying any fees to use a brokerage account. This is one that, like the online bank scenario, brokerage accounts used to be quite expensive to have. You had to go to a physical building where a stock broker would buy and sell stocks on your behalf. Nowadays, with apps like Robinhood and M1 Finance and E-Trade and all these other ones, you can do all your trading for free. And if you're paying for trades, you're probably in a poor choice of app, and I would switch out of that as fast as possible. You're always welcome to contact me to kind of like ask questions. I can't tell you what to invest in or what to invest with, but I can certainly help you evaluate your options. And cryptocurrency wallets, this is a wild west in terms of technology. Some of the big ones out there are like Coinbase, and Robinhood again will let you trade cryptocurrency, but with these apps, these virtual wallets, you want to really check to make sure that they are secure, and you want to see what the fees are. So I know in the case of Coinbase, every time I make a transaction, there's a fee attached to it. So every time I buy or sell a cryptocurrency. So it doesn't make sense to buy like $2 worth. It makes more sense to save up and buy $200 worth if I'm going to do it in one go because of the fees attached. All right, so when you are thinking about it, think about any option this way. Like, what are the fees? How easily can I access my money? Is my money insured? So with a brokerage account, that is not going to have FDIC insurance. That's going to have a different type of insurance, but again, check to see that any brokerage account you use has insurance attached to it so that your money is protected. Cryptocurrency is still kind of the Wild West. It's unlikely you're going to find insurance for your cryptocurrency, but the idea behind cryptocurrency is that the blockchain technology it runs on is so secure that it's impossible to hack or to fabricate transactions. So that's the hope, that you actually would never need insurance. So as far as we know, the cryptocurrency blockchain has not yet been hacked, or people have not had their money stolen in that way. People have had their money stolen through like fake schemes and stuff like that, but not from somebody actually physically hacking their account and taking their money out. So it's a relatively safe place to put your money, even though it's an extremely volatile place. So like the rate at which your money increases or decreases is very high-low, depending on the day, the minute, the hour. So we'll talk more about cryptocurrency in our live classes, but that's something that you can evaluate if you want that to be part of your financial life.